Good morning, everybody. Welcome to the Morning Blast. It is Friday, the 1st of May. How the fuck is it May already? What is occurring? You join myself and, of course, Mr. Michael Brown for your very candid take on markets. Come join us if you don't take yourself too seriously, you don't mind a bit of a rant, and you don't mind a bit of should we say, kind of folksy, explicit content. Michael, how are you?
Yes,
Happy
very good
Friday.
morning. Indeed. Very good morning to Ryan. Good morning, everyone. Very happy Friday. We've made it to the end of another long week for financial
And
markets. And, of course, it's May, isn't it? How the hell have we ended up there?
Yeah.
And as I was just saying to a few colleagues, we're looking at a relatively calm and tranquil morning.
great.
Half of Europe
Thanks.
off on holiday. And the Ministry of Finance in Japan have already decided to try and ruin that one.
Yeah, quite. Before we crack on, just a friendly reminder, nothing said on this podcast is trading or investment advice, or indeed, half the time, makes sense. But there we go. But as Michael just alluded to, it is May Day for pretty much all of Europe. I believe it's just the UK and Denmark in Europe that aren't on holiday today.
Yes, you are correct. Although, of course, we are out on Monday.
Monday.
So we won't have a morning blast on Monday either.
Exactly that. So yeah, so markets in European session, etc. Well, very much like your Barnet, Finn and Wispy. And speaking of Finn and Wispy, no technical analysis and no market update from Clive Lambert because, bless him, he's had a bit of a dicky belly overnight. He's also gone on holiday later today. So get well, Clive. Where do we begin, my friend? Where do we begin? Obviously, yesterday, quite a big
I
earning.
hope you're not relying on me to do technical analysis because
Absolutely not.
I was going to say, that really is not going to go down well, is it, if we're being
Up
honest?
and to the right.
Yeah, or down and to the right if you're looking at something like spot dollar yen.
Right. We start with the Middle East quickly.
Yeah, go for it. Why don't we do that? Because
So obviously it was
you do that while
briefing.
I find my notes because I'm knee deep in spreadsheets from the BOJ here.
Oh, okay. Fair enough. So obviously yesterday overnight, whenever it was, depends on where you are. CENTCOM, obviously we had the briefing that they were giving to Trump that we actually mentioned in yesterday's show. So apparently it was 45 minutes on military options. Strait of Hormuz control was explicitly on the table. The Defense Secretary Hegseth has paused the War Powers 60-day notifications clock to Congress. Also, we had a uranium seizure option was discussed, which is regime change logic, apparently, not deterrence. And so far, ceasefire in Gaza is holding, although it is still kicking off in Lebanon, which we know was an Iranian red line. But apparently Iran's still unable to get their act together per Trump's Truth Social post. And if we remember what that was, he was basically saying, look, words to the effect of, we've taken out pretty much everyone in power, and now there's no one left in power to talk to. So as me and Michael said, I think it was last week, you could argue that the strikes were potentially too effective, and that's why we're in this kind of a bit of a sticky situation. Obviously, the CENTCOM kind of taking control of Hormuz is basically what the market's been looking at recently, because as we said before, there's a difference between a ceasefire and the strait being open, because we've been in a ceasefire now for 2 weeks, but ships still aren't, one or two ships, or don't get technical with me, but a few ships are passing, but nothing like the numbers we know we need. So potentially, if they're now focusing on just the strait, things could be looking up oil-wise, but we'll see. There's obviously many things at play here.
Yes, indeed. And I've got my notes now, which is probably going to be quite helpful to get through the rest of the show.
Quick one. So this, because I have, hold my hands up, I should have maybe did a bit of research on this, but the 60-day War Powers notification clock being paused, that means that Trump and Hegseth, etc., they can do something. They can kind of take a military action, like a significant military action, without running it through Congress first, right?
I believe so, yes. Again, it's not something I've read up on too closely either, to be completely honest with you. Both of us have got some homework to do over the weekend now. But yes, I believe you're correct. Although,
so basically, what they're saying, by pausing it, they could just go gangbusters and just do whatever they want without telling Congress.
But I would also, I think you're correct, but I would also say I'm not entirely sure it matters that much, given that they did this. They started this without telling Congress. Trump went into Venezuela without telling Congress. Is Trump there are democratic norms that should be respected, of course, but is Trump the sort of guy that's going to do that? Not all the time. I think we know. I think that. I think he's made that quite clear. So maybe making a little bit too much out of this one.
What's that phrase? Better to ask forgiveness than ask it, or whatever it is.
Ask for forgiveness rather than permission.
That's the one. That's definitely how Trump acts.
Yeah, well, I'm very surprised you don't know that phrase, actually, given the way you act quite a lot of the time. But there we
Oh,
are.
okay, moving on, moving on. Is
Oh
there
dear.
anything else on the Middle East that you need to bring up?
No, I think that is probably it, to be honest with you. The only other thing is that there were some various reports yesterday via Pakistani officials that they were expecting a revised Iranian proposal to end the war to come by the end of this week. It's not clear, by the way, whether end of the week means end of the working week, i.e. today, or end of the actual week, i.e. Sunday. But again, it just kind of shows that there are bits of paper being exchanged, even if progress is still, sort of painfully slow, and even if the Strait of Hormuz is still essentially impassable at this moment in time.
Exactly that. Right. I'm liking that recently we've been able to skirt over the Middle East without having to dive in for 20 minutes. That's pleasing to me.
Yeah. That's not
Because
to, before anyone comes to us, that's not to minimise the severity of the situation going on
absolutely
there.
not.
It's simply just that there isn't really much new going on, to be honest with you.
Yeah. And anyone that knows us by now, if we haven't got much to talk about, we will skirt past it.
Indeed. So let's go to Japan in that
Yes,
case.
go to Japan, yeah. Don't do the
Because,
eyes.
oh God. I'm just annoyed because I wanted to say.
Yeah, I bet you did. Oh,
Deary me. Right. So, Japan, what's been happening in the yen? Of course, the Japanese have been for months now basically messing around, trying to jawbone and prevaricating over whether or not they're actually going to step in and prop up the value of the currency. Yesterday, we heard some fairly stern language from Nomura, who is the top currency diplomat in Japan. He was saying that. Yeah, exactly. He was saying that he's issuing a final warning to speculators that intervention could be on the cards. Well, he didn't give people very long because about 10 minutes after he issued that final warning, they dropped the hammer. Dollar yen trading around 160.5 before this intervention kicked off. We traded down to a low of 155.5 yesterday. Spot then pairing some of those gains, or spot yen, I should say, is pairing some of that move during the overnight session. But then at around about 7:30 this morning, London time, it seems as if the MoF might have stepped in again. Dollar yen trading 157.25, and then in the blink of an eye, trading 155.50. Yes, that is obviously a much more modest move than the one we saw yesterday. But, if it walks like a duck and quacks like a duck and they intervened yesterday, then they've probably done it again this morning.
yeah.
This is interesting. I wrote up a note on this because of self-publicity. I did write up a note and post it this morning. Intervention is one of those things where I tend to look at it, and this is how I'd be framing this as well, as a bit of a speed bump in the overall trend, as opposed to something that's going to change that trend in and of itself.
Structurally, it's still in the same position, right?
Well, absolutely. I mean, you look at where Japan and where the economy is now compared to where it was on Wednesday before all this happened. You've still got very loose fiscal policy. You've still got the Bank of Japan tightening at a snail's pace, et cetera, et cetera. All the intervention has done is really just tilt the risk reward out of the favour of being short yen for the time being. Because, and actually we mentioned this yesterday or the day before, why are you trying to nick 25, 50 pips out of a yen position when a short yen position, when the Ministry of Finance could move the market 5 big figures offside before you've even realised what's going on?
That's in front of a steamroller.
Exactly that. That's really the aim of what they're trying to do. I think, when the dust settles and everything calms down a little bit, probably sometime next week, then, the market is going to go back to where it was, basically. And this sort of slow but steady grind higher in dollar yen will probably continue. There's no real reason to be, aggressively bullish on the yen unless the Bank of Japan suddenly, start to hike at every meeting or something stupid, which just isn't going to happen.
So a couple of things on this. I think if you ignore rate checks, which we won't say is intervention, I think this is the first true intervention we've had in about 21 months, something along that lines. But the thing that threw me yesterday was we had.
Hang on, I've got a chart here, and I can tell you exactly when the last intervention was because it was on my birthday in 2024.
When you were 18.
Not quite.
18 or 60. There's a wide spread on how old Michael could be.
About as wide a spread as was being quoted in dollar yen yesterday, to be fair.
Well, quite. But yeah, the thing that threw me the most yesterday was, like you said, we had Nomura come out and very, very sternly basically said, if you guys keep fucking around, we're going to slam yen. And then obviously we sold off initially, and I'm like, okay, well, this is just people going, do you know what? He sounds pretty angry. We might as well just get in front of this because we know where the level is now. But then, like you said, then they intervened 10 minutes later. Now, I do kind of think they maybe should have just held off on the intervention, saved their money a little bit, and just seen what the reaction was for the rest of the session based on his comments.
Yes.
It just seems a bit weird to make those comments, those really stern comments, and then intervene anyway.
Yeah, I agree with you, actually. I mean, and it is actually, again, a little bit of a break with what we've seen from the
Yeah.
Minister of Finance previously, because, what's the point of jawboning if you're just going to step in anyway? You may as well just forget the jawboning and just step in, especially when both Katayama, who is the finance minister, she was saying yesterday, actually, that they're nearing the time to take bold action on FX. And again, that was just before they actually stepped into the market. Overnight, both of them have gone, well, we're not going to make any comments on whether or not we've intervened. You know you've done it.
Yeah.
The Nikkei in Japan, the local media, has reported that you've done it, citing government sources. The market has moved to such a degree and volumes have spiked to such an extent that it's blatantly obvious you've stepped in. I do think that the sequencing is rather strange in terms of how that has worked. The other thing I would just point out is that the intervention we've seen, or we think we've seen, is different from the other four that we've seen in the last kind of 5-10 years or so. And the reason for that is this appears to be much more focused on trying to defend a level than it does volatility. Because if you look at where implied vols are, they're basically on the floor. If you look at where dollar yen, or where trade weighted yen index has moved over the last month, or the last 2 months, or the last 3 months, in general, the magnitude of the weakness that we've seen in the yen over those periods has been about half that we've seen in previous intervention rounds. So it does feel as if Katayama and Mamura and Takaichi, of course, the prime minister, are oh god. Are a lot more focused on, kind of putting out a line in the sand and defending that line than just this general view of, we're worried about speculation that we've spoken about previously.
Yeah, what Michael's referring to there is obviously, basically, it feels in the past, like, to put the lowbrow take on this. Basically, in the past, they haven't really, it's not about kind of the level, how high the tide was going. It's more the motion in the ocean. They didn't like a choppy sea in the yen, and that's when they used to kind of step in. But now, as you said, we didn't really have any volatility, and they were like, well, fuck it, it's hit the level. One thing to note, and I'm interested on your feedback on this one. When I say feedback, I want you to tell me if I'm right or wrong. I see a few people, well, not me, actually, other people that I'm now quoting. Few people noting the 155 level is the kind of the level where if we break decisively below that, the leveraged carry positions start to unwind, and obviously that would mean selling of US equities and risk assets, and that was funded by cheap yen borrowing. Is that something to keep an eye on for the equity plays kind of further afield, or are you thinking I'm not really interested in that?
No. Come on. If you turned bearish stocks on fear of a carry trade unwind, you'd have sold the S&P in like 2017.
Well, I'm glad you said that, because I read that and I was like, I feel like someone with a bit of a hidden agenda is trying to say, if it gets done here, now you want to start selling stocks.
Yeah,
so I'm glad you've dispelled that myth, because I was thinking either I'm being too naive or this is bullshit.
And also,
bullshit.
The other thing is, I would imagine the same people peddling that nonsense this morning are the ones who've actually been, for the last year or so, saying, well, the carry trade is, but also the carry trade is going to unwind because the BOJ are hiking. Well, you can't have it both ways, guys. If it was going to unwind because they've, been tightening policy, it's not going to suddenly unwind again. That's already happened in this odd perma bear book that they seem to be reading from.
Perfect. I do like it when I get you riled up and a bit frothy. It's one of the small remaining joys of my life. Right.
Speaking of being riled up, do we have to do the BOE now?
Do you know what? That is next on my tabs.
Oh, Jesus
BOE.
Christ.
And
honestly.
away he goes. Talk to me about Hugh Peel and what a great guy he is.
Oh, he's an absolute dickhead. Sorry, Hugh, if you're listening. I'm not really. So the BOE, obviously, they held bank rate steady at 3.75% yesterday, as expected, in an 8-1 vote. If you haven't worked out already, the chief economist Hugh Peel dissented in favour of a 25 basis point rate hike. That was pretty much in line with consensus expectations, to be completely honest with you. After that, though, it gets a little bit messy. The policy statement...
Sorry, before you go on, did the last meeting Peel call for a cut?
No.
Okay. Something else I read that I wasn't sure about.
No, I don't. I think you could be in the deepest depression the UK's ever seen, and Hugh Pill still wouldn't want to cut rates. He's that much of a hawk. Yes. So the remainder of the meeting, the bank reiterated in their statement that they stand ready to act as necessary to ensure CPI returns to 2% over the medium term. That was very much in line with the prior guidance. The monetary policy report was just a joke, to be completely honest with you. And instead of issuing a sort of central forecast, which, to be fair to the bank, is somewhat impossible given the current environment, they decided to issue 3 different scenarios as to how the economy may evolve, which basically the differences in those scenarios are: 1, the degree to which energy prices rise and how long it takes them to normalize, and secondly, the magnitude of any second round effects that come through into the economy. As if 3 scenarios weren't enough, they then accompanied that with 5 different policy rules for each scenario to outline how interest rates may move. I think this is just, frankly, a complete and utter waste of time, because Governor Bailey was sat there at the press conference saying the forecasts are already out of date because the market curve for rates has moved and the market curve for crude prices have moved. So the bank staff seem to have wasted their time on that one. As for inflation, according to these scenarios, it could peak at anywhere between, and we were talking about wide spreads, wait for this one, inflation in the UK could peak at anywhere between 3.6% at the end of this year and 6.2% at the start of 2027. I mean, what fucking use is that to anyone?
Absolutely.
I mean, it's just ridiculous. Governor Bailey didn't really add anything to this at the post-meeting press conference. He did describe the decision as, quote, an active hold, not a passive hold. What? Sorry, like English, please. He did also note, though, that in 2 of the 3 scenarios, the interest rate response that they would need to achieve is achieved by basically just not cutting rates like they thought they would earlier in the year, as opposed to delivering a rate hike. So I think the nub of all of that is that the Bank of England are still in a kind of wait and see mode for the time being. Yes, Hugh Pill is voting for a rate hike. I don't think many, if any, others on the NBC are ready to do so for the time being, but I think the bank are probably going to be on hold for the foreseeable on the back of what they were saying yesterday.
Yeah, quite. And like we said before, energy prices are the only thing that's really concerning them on the upside. And as I keep saying, you can't print barrels. So and I don't think the rate's going to change that. But again, as we know as well, we've got the May election coming up, right, in the UK. That's going to put the cat amongst the pigeons. The Bank of England definitely want to be kind of on guard and on notice that they might have to act if things do start falling apart, should Starmer and Rees go out the door.
When things start falling apart.
So the elections, quite. It's next week, isn't it, the local elections?
It is, yes. So local elections next Thursday, the 7th of May here in the UK. Do bear in mind, though, that it's very, very different to a general election where, general election night, we get an exit poll at 10 o'clock and then we count through the evening, and generally by sort of 4 or 5 o'clock the following morning on the Friday, we know the result. The local elections, the vast majority actually of councils don't actually start to count until 9 o'clock the following morning. So it's going to be unlikely that we get the full picture of what's happened at the ballot box until sometime over the weekend, I would expect. Next weekend.
And we find out exactly how bad Labour have done.
Yeah, very is my expectation.
Very. Exactly that. Right, ECB.
Oh, God, yeah. I mean, while
your
the
friend Lagarde.
Oh, gee. Well, my mate wasn't there. The German fella, sadly, he didn't make an appearance, which was very depressing. But regardless,
it's the only reason you watched the presser, wasn't it?
It really was. It was the only reason I was late to record a podcast with Michael Houston, who I could see listening. Just waiting to see if this bald fella was going to pop up.
God.
Ready
with your screenshot.
Yeah, exactly. Anyway, it's like looking in a mirror. While the Bank of England were tying themselves up in as many scenarios as they could imagine, we had the ECB believing that they can control energy prices with interest rates, which is just quite frankly farcical. They did, of course, hold the deposit rate steady at 2% yesterday, while reiterating that they'll take a data-dependent and meeting-by-meeting approach moving forwards. President Lagarde at the post-meeting press conference was saying that they are moving away from their baseline scenario, ago. She then said, and I quote, "Directionally, I think I know where we're heading on interest rates," but she decided not to actually tell anyone where that direction is. I think we all know that that is laying the groundwork for a rate hike. And in fact, the sources stories that we had after the meeting from both Bloomberg and Reuters both noted that policymakers at the ECB are viewing a June hike as, quote, very likely if energy prices don't ease first. So it appears that President Lagarde has not learned from Jean-Claude Trichet and his policy mistakes in 2008 and in 2011, and she is going to deliver a 25 basis point rate hike in about 6 weeks' time into a negative supply shock, into what will ultimately be a negative demand shock. And if there was any semblance of anything resembling economic growth in the Eurozone economy, the ECB are about to shoot it in the face if they go down this path.
Yeah, interesting, like, this whole 6 weeks kind of, like, scope that she's given herself. You know, she's obviously not saying she will hike in June, but what's your thoughts that if things don't improve, that then the hike is the next move? Do you think that's kind of nailed on?
Yeah, I mean, I think and let me be clear, I don't think this is the right policy path for the
Right,
ECB to
exactly
take,
that,
but
exactly.
it's the path that they seem like they are going to take, and that's ultimately what we have to trade. Unfortunately, I don't sit on the ECB, even though I do sit in the press conferences sometimes. But yeah, I think I don't understand the 6 weeks thing, if I'm being completely honest.
No, I was a
If
bit
you are if
weirded out.
you're of the view that policy tightening is going to be required, and that appears to be the view that the governing council are now adopting, why wait? What are you going
Exactly.
to learn in 6 weeks between now and the 11th of June when they sit down again that would materially change the debate in either direction? If anything, the likelihood is actually that the situation could get more or even further away from the baseline, even closer to the adverse scenario over
Yeah,
that following 6 weeks. If you're sat there and you've outlined those scenarios in March and you're already saying 6 weeks later we're moving away from our baseline,
well, there you go.
why are you going to wait another 6 weeks to move even further away from that baseline? Why don't you just pull the trigger? And again, I'm not saying that I think they should, but if that's the path they want to go down, they're just dragging their feet for what I
Yes.
would say is no good reason.
Well, exactly, and like, it's again, we love a cliche, or I love a trading cliche, but I've always said with central banks, they should hike when they can, cut when they must. Now,
Mm,
if you think you've got to hike it regardless, get that hike out the way,
mm.
because if things rectify, you can always cut back, and it's always better. And if things do really hit the fan, and things flip, and the Strait of Hormuz, reopens, but then the economy is in a really shit situation anyway, and then you need to cut, at least you've given yourself a bit more collateral, right? Um,
Yeah, unless it's a case of, and I'm speculating here, but perhaps Lagarde is just desperate not to hike and is just kind of
well,
praying that a
maybe.
miracle pops up in the next 6 weeks that can mean you don't have to do that. I don't know whether that's the case, but hope isn't really a strategy for anyone, let alone when you're setting monetary policy for like the second biggest economic bloc in the world.
Exactly. These are meant to be the smarter people in the room, and quite often they aren't.
Well, yeah, I
Uh,
mean, in this case, they're clearly not. But I do
yeah.
think what was
I
interesting, just
Go on.
on the back of that, is if you think about how relatively how hawkish the ECB were yesterday, I mean, especially with the sources, pretty much confirming that they're going to hike rates at the June meeting unless something changes dramatically. Yeah, you look at the euro, we were trading sort of 117.10 ish before Lagarde got up yesterday, and we got all of the press conference and the sources. We ended the day at 117.30. So the market is not exactly, or the FX market is not exactly looking at this and going, rate hikes are good news.
Yeah. No, exactly that, mate. Exactly that. But again, interesting one to keep an eye on. And again, at least like central banks aren't, depressingly kind of boring at the moment. At least there's stuff going on everywhere, which is nice
Mm.
in a way, I guess, if you're
What
that way inclined.
What I would say, just lastly on that though, and I did put this out on Twitter last night, is it just makes me chuckle a little bit that you've got, the Bank of England who are, without quite saying it explicitly, basically going, we haven't got a Scooby, what's going to happen next? And we're going to, let's try and cover every base possible. You've got the ECB on the verge of, a third policy mistake in the last couple of decades. And at the same time, you've got, half the sell side and half of FinTwit running around going, Kevin Walsh at the Fed is going to be the problem. I mean, at this point, he seems like the only sensible guy in the room.
Yeah, exactly that. Well put, but and you actually put that on social media. Did you get any hate from that?
Oh, probably. I haven't bothered checking.
Right.
Water off a
What else
duck's
we got?
back at this point.
No, true. Well, we had Apple yesterday as well, right? Well,
We did, yes, but I haven't written that down. So hang on a second. Let
but they
me.
were like beats across the board from what I can see. Also, day ahead. What have we got today? Obviously, no non-farm payroll. I've learned that yesterday on the show.
No, the big story with Apple was their revenue guidance. They were previously guiding for 9% growth in fiscal Q3. They now see that between 14 and 17% in fiscal Q3. So things are going from strength to strength there. Yeah, day ahead. Obviously, most of Europe are out, so conditions are going to be like my barnet, thin and wispy this morning. Not much going on, etc., etc. As for the data docket, we get manufacturing PMIs from the UK at 9:30 this morning. This is final data for April, so not expecting any revisions there. And then at 3:00 this afternoon, we get the ISM manufacturing survey from the States. That's expected 53.2 in April, up from the 52.7 we had in March. Besides that, we do hear from my least favourite person in the world, BOE chief economist Hugh Pill. He will be speaking at about midday. We are also likely to hear at some point today from Fed Governor Stephen Myron, as well as regional presidents Hamat Kashkari and Logan. They typically issue statements explaining why they dissented on the policy decision or on the language in that policy statement. So we'll probably get that at some point today. And on the earnings docket, we are due to hear from ExxonMobil and Chevron, both of whom report before the market open. But besides that, that's pretty much it. Beware that markets are going to monitor geopolitical headlines, gapping risk Monday, London closed Monday, etc., etc. I think I've run out of things to say.
Yeah, no morning blast on Monday because it is a bank holiday. Do you know what we might have to do? As it's non-farm payrolls next Friday, and as the weather's getting better, maybe, just maybe, we need a non-farm pints next Friday.
That is a cracking shout, Mr. Paisley.
Right. Thank you very much. That's my one good thing I've said this week, and I was leaving it very late. I was getting to Friday.
Literally the last word of the podcast for the week, and you've pulled it out of the hat.
Well, there you go. So we'll lock that in. So anyone around London next Friday, we're going to have some beers, hopefully in the sun somewhere. So keep an eye on that. But Michael, my dear, dear friend, thank you as always. Listeners, from myself and Michael, we thank you so much for tuning in. Being back on Spaces is definitely seems to be where it's at. Our numbers have rocketed, which is, we're both very grateful for. So thank you for tuning in, especially to our US listeners that get up ultra early to listen to us. Hi, Tracy. I'm waving to you, but obviously you can't see me. That's just dawned on me. Anyway, look, guys, have a cracking weekend. Go out and touch some grass, and we'll see you all on Tuesday.
Indeed. See you then.
Much love.